Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 unanimous strong buy dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and TGI Friday. Today we're taking a look at 3 dividend stocks that not only have attractive dividend yields, but also come in with unanimous buy ratings from Wall Street analysts, meaning there's the opportunity for some great passive income plus future growth potential. So today we're going to take a look at these companies, what it is that they do, and what Wall Street's predicting for those stocks' futures. Now before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. You can also download the TipRanks mobile app to access all your favorite investment research tools on the go using the links in the description. Now let's get right into our 3 strong buy dividend stocks. First on the list, we're taking a look at Viper Energy. Their stock trades under the ticker VNOM and is currently priced at $37.54 per share. It has climbed 50% in the past year and over the last 3 months has gained 8.7%. Viper Energy is a partnership company formed by Diamondback Energy to operate the company's royalty interests. Viper owns land holdings in premier hydrocarbon production basins, primarily in the Permian Basin of Texas, and collects royalties on the gas and oil extracted by the production operators. Their mineral and royalty interests provide significant exposure to perpetual ownership of high-margin, largely undeveloped assets with zero capital requirements to support their sustainable free cash flow. Viper's dividend policy is to return at least 75% of their available cash to their shareholders, and they do so with a base dividend plus a variable dividend. Their most recent quarterly dividend came in at 59 cents per share for a dividend yield of 4.86%, well ahead of the sector average, and you see that payout ratio there of 75%. They shared their Q1 earnings report near the end of April, where they came out with both an earnings and revenue beat. Viper reported Q1 earnings per share of 52 cents, beating expectations by 6 cents per share, and revenue came in at $205.39 million, which beat by nearly $4 million. Management said that looking ahead, they initiated their production guidance for the second quarter and revised their guidance for the full year that reflects continued strong operational performance as well as the pending divestiture of their non-Permian assets. Viper Energy is rated a strong buy with 7 unanimous buy ratings, and their average price target comes in at $44 per share for an upside potential of over 17% from current prices. Looking at our recent ratings down below, on the high end we do have a price target here from Truist that has an upside of over 40%. Our low end price target is from JP Morgan here back in February with an upside of 3.6%. Our second strong buy dividend stock is Copa Holdings. They trade under the ticker CPA, currently priced just shy of $100 per share. Now with some ups and downs in the past year, they are down 2.5% overall, but have been climbing back recently, gaining 9% over the last 6 months. Copa Holdings is an airline company in the Latin American markets. They operate through 2 important subsidiaries, and the larger of them being Copa Airlines, which is an international carrier based out of Panama and operating in South and Central America, the Caribbean, and North America. And then their smaller subsidiary is Wingo, which is a low-cost carrier operating mainly in Colombia. Copa's dividend policy is to pay equal quarterly dividends, which amount to up to 40% of the previous year's consolidated adjusted net income. And their current quarterly dividend comes in at $1.61 for a dividend yield of 4.13%. That's compared to the sector average of 1.6%. Their next ex-dividend date is coming up at the end of this month on May 31st for a payment on June 14th. They also shared a notable earnings beat in their last quarter, which they reported on May 15th. For their Q1, they reported earnings per share of $4.19, coming in well ahead of the $3.38 anticipated. The company also had a revenue beat at $893.5 million, which beat by $21.7 million. Following that earnings report, we had 6 analysts weigh in on the stock, many of them increasing their price targets. The unanimous strong buy rating comes with an average price target of $162, which would be an impressive upside potential of nearly 63%. Looking at our list of those recent ratings, our price targets are grouped fairly close together. Our low-end price target still has an upside of 50%, while our high-end price target has an upside of 80%. And for our third strong buy dividend stock, we're taking a look at Centerra Gold. They trade under the ticker CGAU, currently priced at just $7 per share. Their stock has grown 44% over this past year, climbing 38% in just the last 3 months. Centerra Gold is a Canadian-based gold mining company. They're primarily engaged in the production of gold and copper, and the company operates mines, conducts exploration activities, and develops mineral properties. They own and operate the Mount Milligan copper gold mine in British Columbia, Canada, and a gold mine over in Turkey. Centerra pays out their dividend on a quarterly basis, with their most recent quarterly dividend being 5 cents per share for a dividend yield of 3.02% and a payout ratio just above 60%. Their next ex-dividend date is coming up next week on May 29th for a payment date of June 12th. And along with a quarterly earnings and revenue beat back on May 14th, the company also provided updates to their future guidance. For their Q1, they reported earnings per share of 14 cents, which beat expectations by 1 cent per share. And on top of that, they reported revenue of $305.8 million, which beat by over $10 million and also grew 35% year over year. Management noted that in their first quarter, their cash and cash equivalents increased to $647.6 million, despite making the $24.5 million payment related to their additional agreement with Royal Gold. And with 7 current analyst ratings, the Centerra Gold stock comes in as a unanimous strong buy. Their average price target comes in at $8.09 for an upside potential of 14.5%. And looking at our recent price targets down below, on the low end we have a couple from back in February with an upside of 3%. All the more recent ones are in the double digits with a high-end price target from Raymond James with an upside of over 28%. So that is a quick look at 3 unanimous strong buy dividend stocks. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great weekend, and I'll see you back here next time.